Hi friends, very good morning all of you. Welcome back to CAP classes. Let us continue our discussion with auditing. We have started with chapter 1, nature and scope of audit. And in that we have discussed few questions in the previous session. Today, let us continue our discussion. If you remember, in the previous class, we have covered 5 questions. Question number 1 is the definition of audit, this part. Question number 2, overall objective of the audit or auditor. Question number 3 is scope of the audit. Question number 4 is aspects to be covered in audit of financial statements. And question number 5, advantages of conducting audit of financial statements. Okay, these 5 we have seen. Today, let us go to question number 6, which is inherent limitations of audit. Question number 6, inherent limitations of audit, which is very, very, very important. Given in the examination multiple times, so many times a question from this area is given in the examination. So this is important from exam point of view also. Okay, so let us start today's discussion with inherent limitations of audit. Okay, now, do you remember in question number 1 and 2, especially in question number 2, we have come across a phrase, reasonable assurance. This one, reasonable assurance. Okay, so let me highlight this word for you, reasonable assurance. Now, is it possible for an auditor to express absolute assurance on financial statements? This is the question. What is my question? Is it possible for the auditor to express absolute assurance on financial statements? Answer to this question is no, he cannot. He cannot. Simple, go to a doctor. So this is the common example I give all the time. Okay, in all the batches, I use the same example. Go to a doctor. There is a patient. The doctor has to perform a surgery. Ask him what is the chance of recovery. He said 90%. Or he said, no, this is not a great deal. This is a very minor surgery. I have done 1,000 surgeries like this. And then you ask him, can you write it and give it on paper that the surgery will be successful and patient will be healthy? No, he cannot. He will not. He will not. Why? So why a professional cannot give an absolute assurance? Because absolute assurance means 100% assurance, like a guarantee. Another example I give is, go to a lawyer, present a case to him, tell him that this is the case. And then lawyer said, yeah, based on the merits of the case, obviously you'll win the case. Don't worry. Then you asked him, can you give it on stamp paper? Or can you give it in writing that I will win the case? Can you give it in writing that I will not be subjected to penalty? Can you give it in writing that there will not be any punishment to me on this case? Can you give in writing outcome of a case? He will say no. Then you asked him, bro, you studied 5 years BL, 3 years LLB, LLM, masters, you have done 3 years, 8 years studies. 1 year, 2 years, you have worked as apprentice under one senior advocate. Then you have been practicing for 20 years. You have seen 400 cases similar to this. And still you cannot give absolute assurance. He will tell you, no. How many patients I have treated as a doctor? How many clients I have served as an advocate? How many auditee clients I have conducted audit as an auditor? Doesn't matter. My skill, my knowledge, my experience, my ability to judge, my ability to express an opinion, these things will never matter when you're asking to give an absolute assurance. An absolute assurance is not possible. So remember, absolute assurance can never be given in any audit. If this is a true or false statement, true. If you are giving this as a true or false statement, if ICI has given you this as a true or false statement, this is true. Absolute assurance can never be given. Then what can be given? Only reasonable assurance can be given. What is reasonable assurance? Reasonable assurance refers to high-end positive assurance, but not absolute. That means when I express an opinion, my confidence level could be around 90%, 95%, 96%. So this 90, 95, 96 is never given by ICI or any of the authors or any of the auditors. Okay. In the classroom, to make the student understand, I am taking some numbers which has no basis, no relevance. But I'm saying that maybe with 90% confidence or 95% confidence, we can give audit reports, audit opinions, but not with 100% assurance. So absolute assurance is not possible. I can give you a very high assurance. I can give you a positive assurance that the financial statements are showing true and fair view, or financial statements are not showing true and fair view, or financial statements are showing true and fair view subject to these qualifications. I can give you a positive assurance, which is a high level of assurance, but I cannot give you absolute assurance. Now, if you ask me, Pavan sir, why can't you give absolute assurance? Absolute assurance cannot be given due to inherent limitations of audit. What is this? Inherent limitations of that means there are certain limitations placed on the audit, placed on the auditor, which are unavoidable. What is inherent? Inherent means already embedded in the system, which cannot be avoided. Which cannot be avoided. So there are certain challenges. There are certain limitations because of which it is not possible for me to give absolute assurance. Now, the question is, Pavan sir, what are those limitations, Pavan sir? That is our today's question. Today, we are going to discuss that only. That is our question. Now, look at the material. Inherent limitations of audit. So, all of you read this paragraph. Read this particular paragraph. Inherent limitations of audit. So, an auditor is not expected to, or rather cannot, reduce audit risk to zero. What is audit risk? Audit risk is a risk that I express inappropriate audit opinion where the financial statements are materially misstated. That means in layman language, there are some frauds or errors in financial statement, but I did not them. I did not report them, and I have given a clean report. That means there is a fraud, and in my report, I said there are no frauds. That is audit risk. Can I reduce that audit risk to zero? Whatever my experience is? No. No. Even if you go to a person like Ramjet Malani, who is considered to be the highest standards when it comes to a lawyer or an advocate, those kind of people, even they cannot give you absolute assurance about the outcome of a case. So no one can reduce audit risk to zero. And you're not expected to also. ICI is saying, Pavan, come on, don't worry. I know you are a studious guy. I know you are a very serious, sincere professional. I know you always crave for perfection. But darling, please try to understand. Reducing audit risk to zero is not possible. Point number one. Point number two, I'm not expecting you to do that. ICI itself is saying in standard on auditing 200. The auditor is not expected to, and for that matter, cannot reduce audit risk to zero. Pawan sir, why? Because there are inherent limitations of audit. Now, what are limitations? From where the limitation is coming? Reason number one, nature of financial reporting. When you look at preparation of balance sheet and P&L, there is a lot of judgment and subjectivity involved by management. There is a lot of judgment and subjectivity involved by management. For example, I'll give you a small example. Depreciation. What is depreciation? How do we calculate depreciation? Cost minus realizable value, net realizable value divided by scrap value, estimated salvage value divided by estimated time. Okay. Now, what is realizable value is to be estimated. What is economic life is to be estimated. So if I take up an asset, its life is 4 years, 5 years, 6 years, or 8 years, who knows? And it is my judgment that I use this asset for next 4 years. So it is management judgment. There are so many things like that. You call it provisions, provision for tax, you call it provision for warranties, you call it. Then you call it economic life of the asset. Then you call it estimated realizable values. There are so many estimates. There are so many assumptions made by the management. And this is reason number one. Reason number two, the nature of audit procedures. Now, try to understand one thing, okay? I am an auditor. I am not an official investigator. If one income tax officer with a written letter and authority, with an order passed by, one income tax officer or some commissioner of income tax who's of a relevant cadre, who has the authority to give this kind of investigation letter. With that letter, if income tax officers or the crew of income tax officers are coming to client, to the SSC, they can do anything. They can break the almiras, they can enter into, different rooms, they can break the safes and all. If parts have the storage, they can do literally anything. But as an auditor, can I do that? The answer is no. How can I do it as an auditor? I can ask for information, but what if the information furnished by the client, intentionally he has not furnished the information, or intentionally he has given the wrong information? What can I do? I cannot do anything. I cannot do anything. So in audit procedures also, there are certain limitations. Point number one, I'm an auditor, not investigator. I cannot, barge in, I cannot dodge, or I cannot break doors, and I cannot get evidences like that. I can only ask for evidences. Point number one. Point number two, intentionally, if the management is not providing information, I cannot do anything. Point number three, if there are some sophisticated frauds, there are certain frauds which, where a person who has proper knowledge, just give me a second, please. So there are, some in management cadre, there are some director, you call it finance director, or you call it managing director, or you call it CEO. Intentionally, they have done certain frauds. Auditor may not be able to detect those kind of frauds. I'll give you a small example, okay? There are so many examples. I'll give you a very relevant example. Have you heard Toshiba Computers? This Toshiba CEO resigned few years back on an allegation that there is window dressing and there is inflation of revenue. Revenue boosted up intentionally for some reasons, window dressing. And he accepted the allegation. He said that yes. And later he surrendered, stating that $2.1 billion of sales have been inflated. That means whatever the actual sale is, they have increased the sales. They have inflated the sales by $2.1 billion. Do you know what is the meaning of $2.1 billion? In Indian currency, you can say it is around 17,000, 18,000 crore rupees. Now you might ask, Pavan sir, when the CEO of the company increased the revenue with fake invoices, why auditors are not able to detect it? Look here, if there is any fraud which is done in technical manner, sophisticated manner, at the top level, it is always difficult for the auditor to detect. You cannot expect the auditor to detect all the frauds and errors, because there is a very famous quote that says, auditor is a watchdog, but not a bloodhound. A watchdog. What is the watchdog? We'll have, pets in our home. So a watchdog will not run behind criminals, will not chase criminals. That is the role of a bloodhound in police department, or, in fraud investigation department. You might have seen in so many movies, when there is a crime, some specially trained dogs will come along with police. They are trained to, chase the criminals. But a normal watchdog is not trained in that manner. So I am an auditor. I'm not a forensic investigator. I am an auditor. I'm not a financial investigator. I am an auditor. I'm not an investigator. So a carefully sophisticated, technically strong frauds, whatever have been perpetrated by the top level people, it is very difficult for the auditor to detect. So this is nature of audit procedures. So we are discussing about inherent limitations of audit. What is the first limitation? The nature of financial reporting. So in the nature of financial reporting, there is a lot of judgment and subjectivity by the management while preparing final accounts. That is number one. Point number two, the nature of audit procedures. The first one is intentionally or unintentionally, management is not giving me relevant information. I cannot do anything. There are frauds that are sophisticatedly perpetrated by the top level management. I might not be able to pick these kind of frauds. And I'm an auditor. I'm not an official investigator. These are three reasons under audit procedures. So first reason is nature of financial reporting. Second reason is audit procedures. And then third one is timelines of financial reporting. And the most important thing is balance between cost and benefit. Maybe in Indian context, when you are conducting audits as an articled assistant in a small firm or a medium-sized firm, you might not understand this. But my dear friend, if you are working in Big Four, you'll understand this in 1 second. Do you know what it is? How do we quote audit fee? How do we quote audit fee? So we quote audit fee, Big Four especially, or globally, in other countries, if you go, I have seen in Europe, I have seen especially in UK and London. In London, I have seen how audit fee is quoted. Normally, we do not follow that in India. For example, junior associate, these many hours he will spend, this is the rate. Senior associate, these many hours he'll spend, this is the rate. Audit manager, these many hours he'll spend on this client, this is the rate. Senior audit manager, these many hours he'll spend, this is the rate. Partner, engagement partner, who's obviously a qualified chartered accountant who will sign the audit report, he will spend these many hours with the client, this is the rate. So like this, we prepare a budget, we present that to the client approves that, and based on that audit fee, I'll start conducting audit. Now imagine if I allocate 20 hours for this particular client, is it possible for me to cover the whole spectrum of accounting in this 20 hours? The answer is no. Can I cover? No. Can I increase number of hours? Client might not agree. Client might say, Pavan sir, already there is so much of cost in audit and all. We are already spending lakhs of rupees or crores of rupees. Please don't increase the number of hours. No. Point number one, my time is scarce. I have other clients also. I cannot spend more time on this client, genuinely. Point number two, even if I want to spend more time, the client is not giving the approval. He's not ready to pay. So for this particular cost or for this particular fee, how much of the audit can be done? Always I need to balance. I need to trade off. This is what we call cost benefit analysis. So if I spend 10 more hours, what benefit I'm going to get? If I spend 2 more hours, what benefit I'm going to get? Even if I spend 1,000 hours on this client, at the end of the day, can I give absolute assurance? The answer is still no. And Companies Act says your financial year, if it ends by so and so date, your audit should be completed by so and so date. Indirectly, they put this because AGM will come within 6 months. So I want to do a super duper audit and it takes 9 months of time. Do I have liberty to conduct audit in 9 months? The answer is no. 31st March will be the balance sheet date. After that, it will take 1-2 months for the client to complete the closing journal entries and then adjustment journal entries, closing entries and all. Then the draft balance sheet and P&L will be ready somewhere in the month of May. Then the auditor will come. So hardly you will have 1 or 2 months in your hand if you are conducting year-end audit. If you are conducting throughout the year audit, that is a different story. For example, companies like Reliance Industries, March 31st financial year will end. April 10th audit report will come. Because they run audits throughout the year. 365 days audits will be there. It's a different story. Every company cannot do that. So there are timelines of financial reporting. When am I supposed to prepare my P&L balance sheet? There are rules. there are regulations, there are provisions of the Companies Act that by so and so date I should complete my AGM also. For example, September 30th is the last date for conducting AGM. So beyond that, I cannot do audit. Now, before that, I need to complete audit. Are you getting my point? This is another limitations for the audit. And other matters, they have given other matters also. What are the other matters? Just run through. Other matters that affect limitations of an audit. Fraud, particularly involving senior management or collusion. This we have already discussed. The existence and completeness of related party relationships and transactions. Very, 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 very important area. You might not understand this if you are conducting audit of small entities, but imagine an MNC like maybe Samsung, Sony, Microsoft, these kind of companies, Google, having its headquarter in one particular country, one particular territory or geography, having subsidiaries maybe in 100 countries or maybe in 150 countries. Again, coming back, companies like Reliance, they have hundreds of subsidiary companies. They have operations in every possible country in the world. Can you believe? Any country you take, Reliance has business there. Reliance has subsidiaries there. Reliance has associate companies there. Reliance has joint ventures there. Reliance has jointly operated businesses are there. So for an auditor, it is probably, I'm not saying it is difficult, it is impossible identify all the related party relationships and transactions unless client tells it. How would I know who's your relative unless you tell me? So completeness, existence of related party relationships is a very big challenge, especially in big audits. Absence of non-compliance with laws and regulations. This is the primary area of the management. So are they complying with, see, there are two types of laws here. One is laws that will in fact impact financial statements. For example, PF, ESI, VAT, GST, income tax. If there is any non-compliance in this kind of enactments, that will directly affect my financial statements. So I am more concerned as auditor. But what if child labor, hygiene and safety, these kind of, environmental protection, pollution. Okay, so this kind of Factories Act, this kind of enactments are there. If the client is not complying with them, it is very difficult for auditor to, detect these kind of things. I do not know. I might not know what are all the laws that are applicable to you. For example, if you are Infosys, I am conducting audit of Infosys, how many enactments are applicable to Infosys in this 100 countries they're operating in? Who knows? What are the laws relating to information technology in Pakistan? How would I know? But of course, as an auditor, I cannot tell that. I have to do my work, but it is very difficult. Then future events or conditions that may cause an entity to cease to continue as a going concern. Future event. There might be an event in future which might influence the ability of entity to be a going concern. As an auditor, I cannot do anything for that. These are called inherent limitations of audit. So what is the background? We started this question with a statement. Can absolute assurance be given in audit? The answer is no. Only reasonable assurance can be given. What is reasonable assurance? I have told you. Why reasonable assurance? I have told you. Inherent limitations. These are the inherent limitations I told you. And the beauty is, ICI said the auditor is not expected to and cannot, for that matter, reduce audit risk to zero level. This is because of certain inherent limitations of audit. That's all. So you understand any doubts in this question?